We start today in one of the most pivotal phases crypto has seen in months. The market is at a crossroads. Sentiment is deeply cautious, institutional demand is slipping, and two of the biggest assets in the ecosystem, Bitcoin and Ethereum, are facing key tests. If you've been wondering whether the bottom is in or whether risk is still skewed to the downside, you're not alone. Let's break down what's really happening, what to watch, and how you should position. Let's begin with Bitcoin. Bitcoin recently fell below the $100,000 mark, briefly touching lows near $98,000, with long-term holders appearing to sell heavily. That raises alarms. When the investors who normally hold through the dips begin unloading, it often signals real trouble. Bitcoin is not crashing yet, but it's clearly under pressure. Buyers are thin and the supply cluster between roughly $106,000 and $118,000 remains massive. Unless fresh demand emerges, expect consolidation or slow weakness rather than sharp upside. The current range to watch, roughly $97,000 at the low end, up toward $111,900 or so on the high side. Until a breakout above that supply cluster, don't assume smooth sailing. Now let's shift to sentiment. According to multiple sources, crypto market fear is deeper today than it's been in over 6 months. Consumer and trader fear indices are flashing extreme fear. That in itself isn't bearish. In fact, many big moves start when fear is high. The problem here: fear is high and institutional ETF flows into Bitcoin are net outflows. That double whistle signals that even people who should be positioning for upside are sitting on their hands. Without them stepping in, the chance of a surprise upside narrows. So yes, this is a risk-on asset, but right now the on is very weak. Backing to Bitcoin's price, watch for 2 scenarios. Scenario 1. Bitcoin holds the $97 minus 100K area, spot buyers emerge, volume picks up and price works back above $105,000 with strength. That would signal a regime shift, even if gradual. Scenario 2. Bitcoin fails the $97 minus 100K area, dominance falls further, and risk rotates away. That would be a bearish outcome. So you need to define your risk-minded plan now. Let's talk Ethereum. Ethereum is also under serious pressure. It failed to maintain momentum above the $3,600 to $3,700 zone, and is now testing support in the $3,300 area. Trading volume and on-chain activity have dropped meaningfully. Decentralized exchange volumes are falling, TVL is shrinking, and large outflows from spot ETFs are showing that institutional interest is weakening. Again, we have the same pattern. Key support being tested, waning institutional demand, and a nervous market. The upside potential remains, but the path is narrower. If you believe in Ethereum long-term, now's a time to be selective. It's not a buy-and-forget moment, unless you're ready to ride risk. For traders, a clean reclaim of $3,800 to $3,900 with fresh volume would represent a shift. For investors, accumulation near $3,300 or below may be warranted, but only if you're comfortable with potential deeper dips into $3,000 to $3,100. Let's review the broader market and key signals. First, institutional flow. ETFs and smart money products are showing outflows even as retail price attempts to hold. Second, on-chain technicals. Bitcoin's supply metrics show sellers increasing, and Ethereum's network activity is shrinking. Third, macro risk. The dollar index remains strong, yields are climbing, and risk assets like crypto are sensitive to those shifts. So we have structural headwinds, not just crypto-specific ones. Now for actionable levels and trade plans. For Bitcoin, support near $97,000 to $100,000. Resistance cluster near $106,000 to $111,900. If price clears above that resistance with increasing volume, you can consider gradual entries with stops below the $100,000 zone. If price breaks below $97,000 with conviction, reduce long exposure and consider hedges or waiting on sidelines. For Ethereum, consider reducing risk unless you see a reclaim above $3,800 with strength. Support near $3,300 to $3,400. Breach opens $3,000 zone. Resistance near $3,800 to $3,900. Trader psychology. This is where skill matters. The fear you feel right now is real, and it matters. But fear alone doesn't mean a rally is coming. It just means traders aren't comfortable yet. The smart move is defined entry, defined exit, and position size that you can live with. If you're chasing now because you see value, be sure the metrics are aligning. If you're holding long-term, fine, but don't assume smooth path. Be ready for volatility. Let's finish with what to watch over the next 24 to 72 hours. 1. Volume in spot products. Do we see fresh accumulation or no flows at all? 2. Macro data. Yields, dollar strength, any surprise from central banks? 3. On-chain activity. Are wallet transfers increasing? Is DeFi volume rising again? 4. Bitcoin dominance. If Bitcoin starts losing dominance rapidly, that may hint at rotation. If dominance rises, capital likely stays in Bitcoin. In closing, we're in a critical moment, not a calm one. Price action is telling us that demand is thin, risk is elevated, and rewards may be compressed unless a catalyst appears. If you're trading, you've got to be selective. If you're investing, you're fine to build, but do it gradually and with a view that the market might test you first. Patience will matter more than conviction right now. If this helped you get clarity, hit like, subscribe to the channel and comment now. What level are you watching on Bitcoin or Ethereum? I'll pick a few comments tomorrow and dive into them. Protect your capital, position for the signal, not the noise, and I'll see you in the next update.